100K to a 1 million Bitcoin range from that I predict in the next halving cycle. So the 100K is more based on the time model, which is the lower end of that range. The 1 million, or actually this one is at 500,000, is more the higher bound of that model range.
An insightful Bitcoin specialist is foreseeing a remarkable price range for Bitcoin's future. He envisions that in the forthcoming bull cycle, the value of one Bitcoin could soar anywhere from $100,000 to an astonishing $1 million. Supporting his projection are robust models meticulously developed by Plan B, the pseudonymous on-chain analyst renowned for creating the influential stock-to-flow model. Over the recent weekend, Plan B officially unveiled his comprehensive Bitcoin forecast, which is grounded in a systematic approach. Plan B's methodology involves constructing 4 distinct Bitcoin valuation models, each of which has demonstrated remarkable accuracy, surpassing 90% in predictive efficacy. These models hinge on key factors such as time, supply, mining difficulty, and the distribution of older coins. By extending the predictions from these 4 models into the future and encompassing their upper and lower limits, Plan B arrived at his bold predictions spanning from $100,000 to $1 million per Bitcoin. While these figures represent a substantial disparity, the prospect of a 6-figure valuation for Bitcoin is undeniably enticing. For a detailed breakdown of each of the 4 models and an in-depth exploration of how Plan B derives his valuation, I encourage you to stay tuned until the conclusion of the video.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
First model, time model. That's the light blue line here, the very smooth light blue line. It's at the moment around 70K, and time, of course, is an approximation for adoption. That goes over time, more adoption of Bitcoin. And the logic then is that the price increases as adoption increases over time. It's a very basic model, it's a trivial model, and it's also the oldest model that I know of. A very famous one was 2014, a guy named Trololo. Had a very nice chart, and you might know his models, but there was even an earlier variant in 2012. The most recent variant, I think, is the rainbow model that shows that same logarithmic upward sloping curve, but that's basically a time model as well. I implemented here a power law model, which is basically the same thing. Now, the second model is the stock-to-flow model. And the stock-to-flow model is quite similar. It's a dark blue line, quite similar to the time model. However, it has some jumps, and the jumps are, of course, the halvings. It's at 60,000-ish right now, which is quite similar on the log scale, of course, as the time series model, the time model. And stock-to-flow measures scarcity by the stock-to-flow ratio, and the logic then is that the Bitcoin price increases as the scarcity of Bitcoin increases. And there's special interest, of course, for the halvings. Those are the jumps, where the price jumps and the model jumps as well. You see the 2012 halving here, and the price jumps right after that, model 2. 2016 halving, price jumps right after that, and the model 2, same here in 2020. And the next halving, of course, will be in 2024, so we see the model already going up. Now, I created a model, the stock-to-flow model, in 2019. That was here. And it was very intuitive for institutional investors like myself, but also like Fidelity and Grayscale, Van Eck, who used this model in their investment presentations. And I must say, personally, I am invested in Bitcoin because of the scarcity, mainly the 21 million supply cap. That was the argument that did it for me. Now, some people have a very emotional reaction to the stock-to-flow model for some reason. They say it's invalid and it's broken. And that's because the price right now is under is very much below the model. But somehow, for those people, the time model is not broken. the stock-to-flow model is, and somehow in 2017 and 2013, when the price was very much above the model wasn't broken either, and the same also for the time model. So I guess the emotional reactions are more personal, maybe against myself instead of the model so much. But anyway, it's a frequently used model, and it's the dark blue line. The third model is based on difficulty, and difficulty in red is currently predicting 30,000, so it's spot on actually. It measures the network power, the power of the Bitcoin network, and it's very comparable to hash rate and the watts, eventually the number of watts, the amount of watts the network is using. And the logic then is the higher the power, the higher the difficulty, the hash rate, the watts, the higher the Bitcoin price. And that's what you see over time. You also see very nice trends, like here, this very steep increase in the red line is because miners went from CPUs to GPUs to graphic cards. And another steep increase here is when the miners jump to ASICs, so mining specific chips, and from there on it's kind of, well, more flat. But it has a very interesting arbitrage relation, sort of make or buy decision. You can make Bitcoin as a miner with watts, with kilowatt hours, and then you pay a certain price. But you can also buy that same Bitcoin as an investor with dollars, and so there should be a relation, arbitrage relation between the two, because if the price is very much above the model value, the difficulty model value, then of course you're going to mine, and the difficulty goes up. And if the price is very much below the model, then of course you buy it as an investor, and then the price goes up. So very interesting, very economically valid, and well, it's the third model in this chart. The fourth model is UTXO. UTXO, it's a green line. It's at 24,000 at the moment, so it's the lowest valuation. UTXOs are the 112 million Bitcoin fractions that total the 19.4 million Bitcoins that are out there right now. That's the total supply. But of course, as you know, the total supply is not whole Bitcoins. You can have fractions of Bitcoins, and every time you transact a fraction of a Bitcoin into more fractions, the Bitcoins get distributed a little bit wider over more UTXOs. So it's the logic then is that the more the Bitcoin gets distributed over UTXOs, the more the price will increase. And you see it tracks very well. It even got the dip here in 2018 after the 2017 all-time high very well. But then, to be honest, I thought the UTXO models were sort of done, like the address-based models and the transaction-based models, because there's level 2 on Bitcoin right now with Lightning and Liquid. And actually I thought until recently that those models were done, but then last couple of months we saw a sharp increase in the UTXO size to this 112 million, and thus a sharp increase in the valuation of Bitcoin based on the UTXO set. So it's very interesting where that increase will stop or if it goes on. And well, those are the four models that we're looking at. To be honest, all the models did quite well in valuing Bitcoin and predicting the Bitcoin price. In my opinion, none of those models failed. And the big question is, however, how should we use them? And well, for me, how I use them is, you can see at every point in time, let's take this point, 2017, you can see if Bitcoin is overvalued compared to the four valuations models, or if it's undervalued, like in 2018. So Bitcoin moves from the upper bound of the model, of all the models, to the lower bounds, to the upper bounds, to the lower bounds, and that this is sort of this movement. And if Bitcoin is in the lower bound of the models, then it's a great time to buy Bitcoin. And actually, we are currently in the lower bounds of all the models, and as, of course, if Bitcoin is above all the models, and that was very clear in 2013, 2017, then you should be wary. Like, where is this based on? Obviously not a factor in one of these models, not on time or stock to flow or UTXO or difficulty. Probably based on psychology, FOMO. So that's dangerous, and so that's one way you could look at it. You could also take the average of all the models. You could look at the ensemble, the average, which is now 47,000 if we do that for all the models. And what's also very interesting to look at is what should UTXO and difficulty be? Can those two models approach the time and the stock to flow models? And the answer is yes. So in order to do this, the number of UTXOs should rise 70% to 190 million, and then the pricing, the value based on the UTXO set is also in the 60-70k range. And the same for difficulty. If difficulty goes 4x, so that's quite a jump, but it can be done, right? It can be done, for example, based on the insight right now that Bitcoin is very good in balancing electricity grids. The load on those grids can be very peaked and cause problems, and Bitcoin can then switch off the miners and unload those high loads. And also, we see that Bitcoin mining now helps flared gases, oil rigs, to burn those gases and use it for Bitcoin mining instead of flaring them or emitting them into the air. And same with landfills. So the environment argument or the power grid argument could cause a sharp increase in difficulty, in hash rate, and of course a sharp increase in price would also make mining much more profitable, and more miners would enter the market. So 4x difficulty, 70% plus in UTXO set would sort of bring all those models together to the 60-70k domain. And well, the other important thing is in how to use those models. You can see that only the time model and the stock to flow model can be extrapolated into the future, because we know this was the first year, second year, this was the 13th year. We can just put 14 in this formula, or 15 or 16 or 17, and then the valuation based on time is known. Same for stock to flow. We know the halving is in 2024. We know what the stock to flow ratio will do. It will double from today's stock to flow ratio, and we can plug that into the model and derive a value. So only those two models can be extrapolated, and you can see that this is exactly where I got my 100k to a 1 million Bitcoin range from, that I predict in the next halving cycle. So the 100k is more based on the time model, which is the lower end of that range. The 1 million, or actually this one is at 500,000, is more the higher bound of that model range. So how good are those models really? We could look at the goodness of fit, R squared, which is 97% for the time model, stock to flow model, and the UTXO model, and it's 94% for the difficulty model. But then R squared doesn't say anything, and I guess the very important thing to remember is correlation between those 4 factors and the Bitcoin price is not causation. The relation can be spurious, it can be incorrect. So you should always remember that. And also, I mean, those are very simple models based on 1 factor, so you can't expect those models to be 100% correct. 94 and 97% is actually quite good, and 100% would be impossible with these very simple models based on 1 variable. Some people even say that models are invalid and useless because variable X, Y, or Z is not in there. Like, okay, demand is not in there, so the model is not useful. Or the dollar M2 money supply is not in there, so the models are not useful. That is not true. That's not true at all. I mean, yes, a lot of factors influence the price, not only those 4 factors. You have all the macro factors like the Fed and the inflation and interest rates and the money supply of the dollar. You have the SEC with their ETF approvals. You have exchanges that go bust, like FTX recently. All those factors have an impact on price. But most of those factors are random events. The Russia war, who could have predicted it? The mining ban of Russia or of China in 2021, who could have predicted that? Those can't be modeled. What we are looking for in models is the bigger structural factors that play a role in the valuation. And modeling is therefore very much about generalization of order and not memorization of randomness, because randomness is randomness that cannot be predicted. We want the order of things.
Now, let's delve into the perspective of Plan B and his official projection for the upcoming bull cycle. Plan B's meticulous analysis has culminated in 4 distinct models, collectively suggesting that Bitcoin's value during the next bull cycle could potentially span a vast range, reaching anywhere from $100,000 to an astonishing $1 million. This enticing possibility certainly captures attention. Yet, it's imperative to maintain a measured perspective. While these models are underpinned by rigorous scrutiny, the dynamic nature of the cryptocurrency market means that it remains inherently unpredictable and carries inherent risks. It's prudent to bear in mind that even Plan B's renowned stock-to-flow model encountered a breakdown at the conclusion of the previous bull run, despite its remarkable accuracy leading up to 2021. As an investor, relying solely on models can be precarious. Informed decisions should stem from a comprehensive consideration of a diverse range of sources, data, and information. While understanding crucial metrics and models undeniably holds value, comprehending how they influence Bitcoin's valuation is pivotal for cultivating well-informed investment choices. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.